Though I admit I regret my vote for Donald Trump.
Tonight, many of America's farmers already feeling the pinch are worried about the possibility of more challenges.
But in order to have substantive negotiation, you have to bring down your 145% tariff. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
Overnight, buyers who once clamored for U.S. wheat turned their backs, and Canada moved in to fill the gap. Imagine harvesting a bumper crop only to discover your biggest customer canceled a 65,000-ton order at the last minute. That's exactly what happened to American growers in 2025, and more nations are following suit. For decades, the U.S. dominated the global wheat trade. In 2024, American farmers exported over 25 million tons, supplying key markets from Asia to Europe. But systemic breakdowns, delivery delays at Gulf ports, labor shortages in harvest crews, and shifting political tariffs began to erode that dominance. By mid-2025, surplus silos in Kansas swelled by 42%, forcing some growers to burn unclaimed grain rather than watch it spoil. Financial analysts warn of a generational crisis. Young farmers face withering margins, rural banks tighten lending, and entire communities dependent on wheat revenues confront existential threats. In May 2025, Manila shocked the industry by canceling a 12,000-ton tender from the U.S., part of an original 65,000-ton package. Reports say buyers inked new contracts for 110,000 tons with Canada and Australia, valuing reliability over a modest $8 to $10 per ton price advantage. As a result, U.S. exports to the Philippines plunged by 38% in Q2, translating to a staggering $240 million revenue loss in under 2 months. Officials cite political uncertainty and inconsistent regulatory enforcement stateside as deal killers. Meanwhile, Ottawa's wheat industry, backed by CETA's streamlined customs, locked in those contracts within weeks, locking U.S. suppliers out of a market they once led. By mid-2025, Filipino millers praised Canadian shipments for on-time arrivals and traceable quality, while American cargoes faced weeks of inspection delays at Houston and New Orleans terminals. The fallout rippled back to Midwestern elevators. Kansas City's terminal elevators reported record low occupancy rates, and Iowa cooperatives issued distress calls to the USDA for emergency storage funding. If the Philippines taught U.S. exporters their reliability had expired, South Korea's move delivered a second gut punch. In Next, we'll reveal how Seoul canceled 61,500 tons of U.S. wheat over safety fears, sending those buyers straight to Canada and slashing American market share from 35% to below 17%. Stay tuned to see how precision agriculture and stable trade policies gave Canada the upper hand. Before we dive back in, please hit the like button. Your support fuels every story we share. We're aiming for 5,000 subscribers on Global Insight, and your subscription would mean the world to us. Thank you for helping us grow. Now let's continue. Just when U.S. exporters thought they'd hit rock bottom, South Korea delivered a further blow, canceling a massive 61,500-ton wheat contract in early 2025. Korean millers, rattled by reports of U.S. grain carrying 200 to 400 parts per billion glyphosate residue, far above the 30 to 70 parts per billion found in Canadian and Australian wheat, walked away from their long-standing partnership. As a result, America's share of South Korea's wheat imports plunged from 35% to under 17% in just 6 months. Meanwhile, Canada's share soared to over 60%, locked in by long-term contracts that guarantee strict residue testing and on-time delivery. Spokane's largest milling plant felt the sting immediately, cutting capacity by 20% and laying off dozens of workers. Washington state silos, once humming with outgoing rail cars bound for Busan, now sit half empty, while Canadian wheat trains rumble through Vancouver, bound for the Pacific Rim. Across the hemisphere, Mexico's buying habits shifted dramatically. In 2024, Mexican importers spent $72.49 million on Canadian wheat, hinting at a creeping diversification away from the U.S. By mid-2025, American shipments to Mexico tumbled nearly 40%, while Canadian exports jumped over 37% year-over-year in Q2. U.S. flour mills in Texas found their orders slashed overnight. One major processor shut down entirely in June, citing stalled contracts and shifting licensing rules. Arizona farmers, left with unsold wheat, were forced to offload at 20% lower prices, eating into margins they could barely afford to lose. Meanwhile, Italy, home of the world's finest pastas, abandoned much of its American durum supply. In 2024, Italian millers imported $436 million worth of Canadian durum, drawn by its consistent protein content and flawless gluten strength. U.S. suppliers, once boasting a 50% share in Rome's granaries, saw their portion slip to just 15%. Italian chefs and pasta manufacturers, unwilling to risk variations in semolina quality, publicly endorsed Canada's precise agronomic practices, GPS-guided seeding, drone-monitored moisture levels, and rigorous environmental standards. Rome's largest pasta consortium even offered bonuses to mills that could certify 100% Canadian sourcing, leaving U.S. exporters scrambling for credibility. France, often mentioned in speculative headlines, isn't a net wheat importer, but a leading global producer. So any claim that Paris is replacing U.S. grain with Canadian shipments is misleading. Yet French traders do watch export trends closely, setting benchmarks that influence North Africa and the Middle East. When Casablanca's bakers saw Canadian wheat arrive faster and cleaner via the CETA-backed EU corridor, they too began dialing Ottawa for quotes, an echo of U.S. suppliers' lost contracts. By mid-2025, the cumulative effect was staggering. Canada had captured over 230,000 tons of wheat from former U.S. markets in barely 2 months. U.S. farmers, grappling with oversized stockpiles and depressed prices, faced a stark choice. Burn deteriorating grain, store it at mounting costs, or watch it rot in decaying bins. Rural banks tightened lending lines as default notices rose, threatening a domino effect of farm foreclosures. One Kansas grower lamented, "We helped feed the world for generations. Now we're rationing our own family's meals because nobody wants our wheat." By mid-2025, Canada's wheat triumph wasn't luck. It was the fruit of years of strategic investment. While American growers grappled with political whiplash and erratic port schedules, Canada quietly built bulletproof reliability. Canada's prairie provinces mastered precision agriculture long before the U.S. caught on. GPS-guided planters guaranteed uniform seed depth. Satellite-monitored moisture sensors alerted farmers to irrigation needs in real time, and drone-mapped fertilizer applications maximized yield per acre. That next-level consistency meant Canada could promise buyers uniform protein levels, vital for Italian pasta makers demanding semolina with exact gluten strength, and residue well below 70 parts per billion, meeting South Korea's stringent glyphosate standards. Add to that CETA's seamless customs corridors, and Canadian exporters can deliver in 7 to 10 days to European ports. Half the time, U.S. shipments wade through Gulf Coast backlogs. Meanwhile, U.S. wheat fields tell a more desperate story. Surplus stockpiles ballooned by 42% in Kansas, forcing elevators to charge mounting storage fees. In South Dakota, unharvested wheat lay fallow as labor shortages, exacerbated by stricter immigration policies, left fields half-picked. Some growers resorted to burning low-grade grain rather than pay rail surcharges to move it. Rural lenders tightened credit lines as default notices climbed, and younger farmers, watching parents sink under losses, considered exiting agriculture altogether. One Nebraska couple, after 20 years of family farming, posted their land for sale, citing no clear path to profitability in wheat anymore. U.S. trade policy has swung like a pendulum. One season's export subsidies vanish the next. Tariff threats spook buyers, then retract. That unpredictability spawns political risk, And no commodity buyer wants their staple canceled on a Washington whim. Contrast that with Canada's stable, multi-decade trade agreements and clear environmental standards. Buyers, from Filipino millers to Italian pasta houses, began paying a premium for certainty, even at $8 to $10 more per ton. It's a bitter pill for U.S. farmers, who watched Canada, once a minor player, corner markets through foresight and steady governance. Some industry groups push for their own version of precision ag grants, urging Congress to fund GPS mapping programs and mobile testing labs for residue compliance checks. Others propose targeted trade facilitation, creating fast lanes at Gulf ports for perishables like grain. Agricultural economists recommend risk-sharing pools, similar to crop insurance programs, that guarantee buyers a refund if deliveries miss contracted specs. But these proposals face steep political headwinds, and they come too late for many farmers mired in 2025's broken supply chains. If you found this deep dive into the wheat crisis eye-opening, click the video on your screen now for our previous report on FedEx fires employees in the U.S., massive delivery losses reported. See how corporate strategy and automation are reshaping American industries, and learn what these shifts mean for your community and wallet. Don't miss it. Tap that video and stay ahead of the story.